Welcome again, everybody, diving straight into lesson 6, where we will look at divergence and Fibonacci, backtesting, indicators, how we amend the settings, indicators, how we amend or how we view the different time frames. So lesson 6, we can dive straight in. Divergence. Ideally, what we need to do is add an indicator, and I'm going to choose a very simple one from here. It's an oscillator of moving averages, the OSMA. You might not have an OSMA, but we can make one, and I'll show you how to do that right now. An OSMA, oscillator of moving averages, is a MACD. And you might wonder, how is it a MACD? Well, I'll show you. I'm going to check the settings first here. It's a 12.26.9. Great. Okay, so we'll go into the settings on this MACD, 12.26.9. We're going to change green up, red down here. We're going to change green up, red down here. And as you know, I like those to be points. So I'm going to change that to points. You do know if you looked at lesson 2 anyway. Again, green up, nice bright green up, red down, and a solid, or better, solid line there. Now, how do we make this MACD? First, I'm going to go save as default because it came up as I'd reset it during these lessons. How do we make this MACD look like this MACD? Well, very simply, we go into the settings and we tell it we do want to see the minus signal, which is the histogram. We don't want to see the points for the moment, and we don't want to see the line for the moment. So we hide him like this. Now we've just got a histogram, and I hope you noticed how the histogram changed in its appearance then. It got bigger, didn't it? We're going to change the histogram to a line, and right away you will see that it now very, very closely matches the line above. We'll change the settings here so that it looks exactly the same. There you go, and we'll back here and change this now to a thicker line, and you will see that the exact point, green to red, red to green, cross through zero, green, red, green, red, green, red, green, red. It's the same. What you've got at the bottom is what you've got at the top. So we just made a MACD into an oscillator of moving averages. Now, why do I like it for this particular exercise? Well, because it's a very simple indicator for this particular exercise. You can easily and clearly identify the peaks where it goes from green to red, be they above zero or below zero. And you can clearly identify the troughs where it goes from red to green, once again, be it below zero or above zero. Very simple, very easy to see. And one of the things, I'm going to zoom out just a little bit more so we fit a bit more data in. And what I like people to do here for this is to move from left to right across the screen, identifying areas of divergence. Now, I'd normally just use a drawing tool because I'd be using zoom, but we can clearly just use one of them and we can say lower lows, higher lows right there. And the same, we move this line, and over here we've got higher lows over lower lows right there. Often we can see them very quickly, higher highs, lower highs. And that's bearish divergence. It means there's going to be a move down. I'm going to scroll onto, or click onto this and scroll down here, because on here I do have a divergence cheat sheet, and you could quite easily download this one from Google. I think that's where I got it. But if we move him over just for a moment, this is the bit I want to show you. We've got higher highs like this. It says bearish. We've got lower highs, and they're right below. That's what matters, because it's on an as at now basis. So higher highs, lower highs, bearish divergence, and price follows the arrow of the price. Over here we've got a low which is lower than a previous low, so we've got lower lows on price, higher lows on our MACD histogram, or in this case on our OSMA. And if we look here, lower lows on price, higher lows on the below the line indicator equals a move up, and there is the subsequent move up. We could say 760, there's an inside bar breach just above 760 and it moves up to more than 800, so there's a 40 pip move from this line crossing zero with a price action signal to boot. Divergence is massively helpful. We've lower highs, we've higher highs, and price gives us a move down. If we went with this cross, it would be about, I'm going to say 780, and it's gone down to 720. There's potential for 60 pips move there. Don't consider that the switching from red to green is a signal. It's an indication, all right, but crossing zero is the indication from the OSMA. Now, we've looked at how to amend those settings. We have looked at the divergence, and that is what I wanted to cover. I'll tell you what the homework is in the next lesson, because I still want to look at fibs in this one, and for that I'm going to get rid of that drawing tool and tell you that yes, we do in my group draw a fib on a 1 minute chart. Where's the price actually as at now? Well, there you go. We've got a move as at now. You can see the chart is live. It is moving. And we've got a run of colour of at least 3 bars. 1, 2, 3, 4, 5. Great. So we can put a fib on this. I'm not going to go into my settings for the recording. If you've done the course live, this is a great reminder. But we run our fib from the first in the run of colour, the ultimate low, wick included, to the ultimate high, wick included, of the first retracement bar. And then we're looking for what is price doing. Well, here, yes, it's pivoted off 50. That means that this fib is still valid. And we could be looking for a mini W and X, A, B, C to D leg of a W. Now, if we breach the 38.2, technically we've got a signal. If price goes below the 61.8, this fib is dead, of no use to us whatsoever, and we cannot trade based on the fib. But going above, ideally closing above, if that's all we're using, closing above this 24,748 level, because we've only got a fib on there, then we'd be looking for 24,767, 24,778, etc., etc. With no indicators on here, I would need a closed bar. But with the strategy, the dynamic edge or MACD or any indicator that I can correctly read and make good use of, then I'd be able to say once we broke here, I know we're bullish, or if we don't break there, I know we're not bullish. Now, if we break the 61.8 and we don't have a run of colour, we do. We have 3 reds and a green. So there's a seller fib on the go. Oops, we can take this one and simply move him to there. We've got a seller fib on the go, and we know that the 61.8 is equal to the 38.2. We've pinged off a 50% and broke below the 61.8. Now we need to know, well, where are you going? If you are a seller fib, where are you going? We can use the evil twin and go from the top to the bottom. It's not even an evil twin, it's a real seller fib, and identify the targets where price may struggle. If it stays below, it's going to the next line. If it doesn't stay below, we take a little bit of profit there. There you can see the settings that I use on my fibs. If I go into the settings, you can see how I've edited them. I don't have any background, don't need one. And the levels are all in there. You can click the plus button and add as you see fit. You can click the X and delete as you see fit. But that's how we use them. We need a run of colour of at least 3 bars. If you lose the box for the settings, click on one of these wheels and you'll get the box back. We can identify more. We can say we're going to run from the low of this green bar over here to the high of the first retracement bar over here. And what are we doing? We're identifying targets. Excuse me. That's what we do with a Fibonacci drawing. We use it to identify our targets and to help us manage where we put the stop. If we have any level of range, and let's see if we can find an area where there might have been some range, then we can use it for we can ladder that fib. We do have a bit of a trickle there. So I'm going to go from one there. I'm going to go red, 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 wick to wick, red, red, red. We trickle along the line. And what I want to show you is if you're not getting the information that you want, like we haven't had a sensible pullback, we can actually ladder the fib by putting on a second. And we always go from the 61.8 of the first to the same upper or lower anchor. And then we get a new 61.8, 50 and 38.2, whereby we can say we've pivoted off nothing significant, but now we have, and then there the break of the 38.2 with a close below it gives you access to an entry with a stop at the 61.8 and clearly identified targets. And when you look at the opens and closes or the tests of these lines, the absolute close and open on a line, an absolute test of a line, you can see how well the Fibonacci sequence is being respected right there. We've got a little mini W, an X, A, B, C, W for the long, but there's no new fib in there because it's 2 and it's 2, 1, 1, 1, 2, you see? But that's how we use fibs. They help us to measure and manage the move. There is indeed a very good book called Trading the Measured Move, but it largely looks at 4 hour and daily, etc., or 4 hour and above, whereas we can look at intraday fibs on a 1 minute chart. Hope you enjoyed that lesson. I'm going to check I've covered everything in it before I move on. Scroll, 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 scroll back up to the list. And if only I had a memory. Yeah, divergence and Fibonacci backtesting. Well, I'll talk about that in the homework. We amended the indicators and we didn't really need to amend the time frames, but you do know how to do it. Many thanks for watching. I'll see you in the homework section. Bye bye.